This is Shelley Kraft coming to you live on SNN Live. We're at the second annual Growth Capital Expo in Las Vegas 2015. I have with me David Feldman, a partner at Richardson Patel. He's a speaker, he's a panelist, and welcome back to SNN Live.
Thank you very much, Shelley.
So how's the conference been for you?
It's been terrific. It's a lot of energy, a lot of excitement, a lot of interesting companies, having a good time.
So you spoke today. And you've probably been working all conference because I haven't seen you that much.
I've been running around for sure.
So tell me, how was the panel? What did you speak about? And tell me the facts.
Well, we talked about Regulation A+, which is a brand new SEC initiative under the Jobs Act, which is going to allow a simplified IPO of up to $50 million with no blue sky state interference, and the ability to test the waters with investors before you go, and a scaled disclosure that reduces the amount of information you have to give. Everything's going to be just a little bit less, a little bit easier. I've done a lot of reverse mergers, these shell mergers over the years, written books on it, but I've always said we wouldn't need the reverse mergers if IPOs were easier to do. And this holds the significant promise of being that easier IPO.
You know, just to continue that thought, I've been in the markets many, many years. We did a lot of IPOs. Then for some reason there was so many shells left around and it was easier to literally go in to do a reverse merger and then, you know, do a pipe afterward or whatever you had to do. So why, in your opinion, is the IPO coming back? Because it is, and you think it's going to come back even more with the Reg A+. Give me some more detail, because we have an investor audience. We have people who are going to be the buyers of these things. So tell them what the advantages are, if you would.
Well, IPOs are coming back, but still very, very small compared to the heyday before. It's better than it was, but it's still difficult to get a traditional IPO done. It's expensive, it's time-consuming, it's risky, it's dilutive, and not everybody loves it. So a lot of companies were turning to reverse mergers as a quick way to get public. And they will still be attractive as the fastest way to get a company's stock publicly trading. But Reg A offers a way to get an IPO done with lower cost and simpler disclosure that is going to be much more attractive to some of these smaller companies or biotechs, et cetera. And we're very excited about it.
So are the law firms beginning to shift their emphasis into Reg A+, because securities lawyers are a necessary entity, you know, in going forward, because especially when the rules have changed, oh my, you know, and the reporting requirements are, so go ahead, elaborate if you would.
It's really a fundamental change in securities regulation that the Congress required the SEC to do, and they built, it's a 450-page release that lays out how you comply with the new Regulation A, but we've been through it. We've been through it for the last year because it's pretty much the same as they proposed it a year ago. There's a lot to digest, there's a lot to absorb, but we deal with this all the time in terms of changes in securities regulation. But this does create an entirely new regime of disclosure and reporting that didn't exist before. So there will be questions, there will be issues. We are certainly gearing up significantly. In the 2 weeks since this was announced, we already have 2 deals in-house that we're working on for Reg A, and Reg A isn't even official and effective yet. So we're excited about it.
What's the attitude from the broker-dealer network?
Well, we're just starting the process of really educating a lot of the broker-dealer community. I've been going out quietly over the last year or so to a number of the investment banks and walking them through the proposal. And I think they were sort of half listening and half not because they didn't know when it was going to be finalized, whether it was going to be the same. I think now they're paying attention. And any company that's thinking about a reverse merger or self-filing should now look also at Reg A as another option for going public.
Well, it's interesting because you both represent the issuer side and you also represent the broker-banker side, right? So you're getting the interpretations out to both sides, right? So now let's take it a little bit step further. When a company is looking to do Reg A, what is kind of like the first fundamental step besides calling their securities attorney they should do?
Well, they should look at their corporate housekeeping and their due diligence and make sure that their disclosure is going to be correct, it's going to be verifiable, and that they have a good team in place to become a public company. It's a lot of the same things you would do in a traditional IPO. Building a board, making sure you have a strong CFO with public company experience, getting on board the right law firm, the right auditing firm, and so on, that has experience walking these through the SEC.
Let's get your website out there.
Sure. Well, our law firm is richardsonpatel.com. My blog is davidfeldmanblog.com. And I've done a YouTube series that's done pretty well in the last month. It's called The Entrepreneur's Advocate. And on there actually are several videos, very short 2-minute overviews and guides on Reg A and some of the crowdfunding initiatives going on now.
So ladies and gentlemen, David Feldman, partner at Richardson Patel. He's a speaker, he's a panelist, he's an author, he's an attorney, he's probably a good dancer. Ladies and gentlemen, no, sorry, he's not a good dancer, but please get in touch with him if you need him. I'm Shelly Kraft, not today, and he's not a good dancer, to repeat. This is Shelly Kraft, this is SNN Live, and we're coming to you live from the 2nd Annual Growth Capital Expo in Las Vegas, 2015. Dave, always good to see you.
You too, Shelly.
Good, thanks for coming.
Great conference.
You got it.